What if your money stress isn't caused by low income, but by numbers you've never actually calculated? Most people don't have a money problem. They have a visibility problem. They check their bank app, feel a wave of anxiety, and promise themselves they'll look into it later. Later never comes. Today, we fix that with a practical, step-by-step financial audit you can copy for your own life. Welcome to Elon Finance. Let's run the numbers clearly and calmly. First rule: never audit your finances in a panic. Stress pushes your brain into short-term mode. That's when you underestimate spending, ignore statements, and make emotional calls. Pick a quiet hour. Eat first. Bring water. Set a 20-minute focus timer with short breaks. Treat this like diagnostics, not judgment. You're not on trial. You're gathering data. Let's walk through a realistic case. Assume someone earns $78,000 per year. Sounds solid. But gross income is theory. Net income is reality. After taxes, insurance, and payroll deductions, their take-home pay is about $2,600 every 2 weeks. Multiply by 26 pay periods, divide by 12 months. That gives roughly $5,600 per month net. That's your true starting number. Everything else is marketing. Now, we map the outflow in 3 layers. Layer 1. Survival expenses. These are the bills that exist, even if income stopped tomorrow. Housing, utilities, groceries, transport, insurance, phone, minimum debt payments, essential medicine. Pull 3 months of statements and average them. No guessing. In our example, this totals about $2,700 per month. Many people discover this number is higher than they believed, and that alone explains their stress. Layer 2. True savings movement. Don't use what you transfer. Use what actually accumulates. If savings were $4,000 6 months ago and are $7,000 now, that's $3,000 growth, or $500 per month. But check debt balances too. If credit cards increased by $1,200 in the same period, your real savings rate drops by $200 per month. Net progress is the only honest metric. Layer 3. Lifestyle spending. Take net monthly income and subtract essentials and net savings. What remains is discretionary flow. Restaurants, delivery, subscriptions, clothes, gadgets, short trips, random purchases, convenience spending. In this scenario, it lands near $2,400 per month. This is where most people say, "Wait, seriously?" Yes, because small frequent spending compounds quietly. Now we calculate 2 diagnostic ratios. First, savings rate. Monthly savings divided by gross monthly income. If gross monthly is about $6,500 and savings are $500, that's roughly 7 to 8%. Functional, but not powerful. Long-term wealth builders usually aim toward 15 to 20%. The gap tells you how much system adjustment is needed, not how bad you are with money. Second, essentials ratio. Survival costs divided by net income. Here it's around 48%. This number is incredibly revealing. If essentials exceed 55 to 60%, your stress may be structural, not behavioral. That means the lever isn't tighter budgeting. It's income growth, housing change, or transport redesign. If essentials are under 40% and stress is still high, then spending behavior is the likely pressure point. Different diagnosis, different treatment. Next comes the stability foundation. Stage 1. Hold at least 1 full month of survival expenses in cash. This converts emergencies into inconveniences. Stage 2. Pre-fund predictable yearly costs, travel, gifts, renewals, by dividing them into monthly buckets. Stage 3. Eliminate high-interest debt aggressively while maintaining minimums on low-interest loans. Interest is negative investment return. Stage 4. Expand your buffer toward 3 months of essentials. That's where financial breathing room begins. Now here's the mindset shift most people miss. Optimization beats restriction. You don't win by cutting everything. You win by fixing the biggest leaks. One housing adjustment can equal 20 canceled subscriptions. One refinance can beat a year of coupon clipping. Hunt the big gears, not the small screws. Also measure friction costs. How often do you pay for speed because you're disorganized? Rush shipping, last-minute bookings, late fees, food delivery because there's no plan. Systems beat willpower. A meal plan beats motivation. Auto transfers beat memory. Defaults shape outcomes. When you replace guesswork with measurement, money stress drops fast. Not because every number is perfect, but because uncertainty disappears. Clarity turns finances from a fog into a dashboard. And once you can see the road, you can actually steer.